Good evening, everyone, and a warm welcome to today's webinar. This is the first in the series of the webinar, which we intend to bring it to you. And there is also several podcasts which we have planned for you under our Ignite program, where we will be connecting you with a lot of industry experts on various subjects for your benefit. So I am Prateek, I'm your moderator, and I'm thrilled to guide this conversation with our distinguished subject matter expert. But before we dive in, let me quickly give you an overview of this initiative called Ignite. What is Ignite and what is the purpose of this initiative? Launched on September 29th, 2025, Ignite is a flagship strategic distributor engagement initiative by KFintech. It aims to empower mutual fund distributors ecosystem by transforming them from mere transaction partner into efficient tech-enabled growth allies. Ignite addresses evolving investors' demands for faster, cost-effective, and transparent digital services. So what's the core of Ignite? The core of Ignite is dedicated relationship managers, accelerated service deliveries, and access to various digital tools specially curated for the entire distributor community for streamlining operations and digital scalability. So about today's subject matter expert, it's a pleasure to introduce Mr. Archit Lohia, who's an MD and CEO of Career Topper Online Education. By qualification, he is a qualified CA. He's done his CFA, CAIA, and LLB. So what will be the takeaway from this session today? So this session will demystify who qualifies an accredited investor, why the rules exist, and how recent changes could reshape access to high growth opportunities. So I won't be taking much of the time. I'm handing over to Archit. Archit, over to you. And post the session, we would be having a Q&A. So if anyone is having questions, do please type in the chat box and we will take up the questions for you. Thank you, and over to you, Archit.
Okay, thank you, Prateek. It's always a pleasure to interact with market participants, distributors, and I'm glad to associate with KFintech for this initiative. Today's topic about the certificate of accreditation for HNI investors has gained importance in the last 2 or 3 months because SEBI is promoting knowledgeable and qualified investors to take on higher risk, get access to certain benefits, which are in terms of ease of regulations, access to markets, and also easier reporting as HNI investors as well. So, to start with this, I've given a background. Can I have the PPT on, please, if possible? Great. So just to take this forward, the collaboration under Ignite is to give distributors the knowledge of why accreditation is important and also how you can get the documentation done in a hassle-free manner and allow your investors to a suite of sophisticated products, right? I'm sure we all are aware of pooled investment vehicles like PMS, alternative investment funds, AIFs, and also the new framework of the SIF. So a lot of investors, with the increase in risk appetite and the per capita GDP increasing in India, there is a lot of demand for personalization of investment products, and no one wants to have the same risk return appetite and invest in a mutual fund or a passive ETF. Some portion of the portfolio we are seeing investors are now allocating towards high risk, high reward assets, especially in private markets, in the pooled investment vehicles like PMS and AIF. To access such markets in a much easier format, it is very important for investors to get accredited. So what actually am I talking about when I say accredited? The whole purpose of getting this new class of investors is to allow them a certain risk return product as per their own suitability, so that they do not need to depend on lower risk, low return products being commonly offered in the market, right? So the intent of SEBI behind this was those investors who want to take more risk should be offered some kind of personalization and some kind of customized products so that they can achieve their risk return objective. Obviously, keeping in mind the constraints as well. Every investor has constraints like time horizon, legal and tax requirements, any unique liquidity requirements. So any product which serves the investor with their risk return profile, at the same time keeping in mind their own constraints, those products are more suitable to these kind of accredited investors. And that is why SEBI had come out with this framework in 2021. Okay. Accredited investor is basically anyone who has the financial capability and has the power to take decisions and invest in high risk return profile investments. Okay. Most importantly, should be able to absorb losses as well. Okay, because in India we are seeing that less than 4% of investments are made in equity as an asset class, and the major reason behind this is that there is limited risk return appetite. Now, because of that, if HNI investors suffer due to lack of products available in the market, then what happens is that they explore foreign capital markets and invest in international equities and also products which are available in uh, GIFT City or IFSCs, which may not be available in India, right? So SEBI has said that, okay, let's try to have different offerings for different investors who meet the criteria for accreditation. Okay. And as I was mentioning earlier, the the regulatory requirements to be fulfilled are now very, very limited for an accredited investor, right? So first and foremost, let's understand that what is the eligibility norm in India to get the certificate of accreditation. Then we'll also look at other global markets like US, UK, and Singapore, etc. Okay. Now in India, as an individual investor, if the net worth of the investor is more than 7.5 crore, then you will automatically be eligible for an accreditation. Or the second option is annual income of more than 2 crore. Okay. So you have to disclose that income in your ITR. And lastly, if both of them cannot be met, then you can have a third option, a hybrid of both net worth and annual income. Net worth should be at least 5 crore and income should be at least 1 crore, both combined, right? Now, net worth, 50% of your net worth has to be in the form of financial assets. So if you're going in the first route of net worth of 7.5 crore, at least 3.75 crore has to be in the form of financial assets. We also call them liquid assets. Okay. Uh, Now, what do you mean by these financial assets? So any investments made in listed equities, mutual fund units, even PMS, AIF units, and now even unlisted securities are eligible to be counted in financial assets. So whether you have invested in NSE, which is an unlisted company as of now, or if you're buying an AIF unit, which is investing in other listed and unlisted equities, and even PMS, all will be combined and taken together in your heading of financial assets, right? So 3.75 crore has to be in the form of such financial assets, and the other 3.75 crore can be in the form of illiquid assets. Most importantly, we are seeing a lot of jewelry and gold being held by Indian family households. So jewelry and gold can also be taken into account to compute a net worth, but it will not be a part of financial assets. It will be a part of the non-financial assets. Okay. Similarly, if you want to include real estate property, then you can do only those real estate properties which are not self-occupied. Okay. So for example, if I'm staying in my own house, even though that flat is more than 10 crore, I will not be able to count that in my net worth. However, if I've invested in some other land or a property or an apartment and put it on rent, then that property I can take in my net worth, which is my second property. And the valuation of that has to be as per the ready reckoner rate, which is available on the as per the government's valuation. So you cannot consider market value. You have to always consider the ready reckoner valuation of your property, right? So this way I've spoken about what all assets can be included in your net worth. Okay. And half of your net worth has to be in the form of financial assets, whether you go to the first route of 7.5 crore or the third route of net worth of 5 crore plus annual income of 1 crore, right? In fact, if you see the net worth criteria in India is also very, very similar to global standards. And that's also, I would say, a decent job done by a regulator. So in US, if you want to become if you want to become an accredited investor, then you have to have $1 million worth of net worth, or you have to have an annual income of $100,000 individually. If you're doing joint application for accreditation with your spouse, then you and your spouse have to have at least a $200,000 income which you report, right? Similarly, in Singapore, we are seeing that the net worth criteria is 2 million Singapore dollar, out of which at least 1 million Singapore dollar has to be in the form of financial assets. So it's same as what if you see India has also done, that 50% net worth has to be in financial assets. So that is actually the same as Singapore. In Singapore, the values are $2 million total net worth, and half of it has to be in financial assets. Income wise, also over there, income is 300,000 Singapore dollar to be eligible for accreditation, right? Similarly, in European Union, the net worth criteria is 500,000 euros, right? That is also, I would say, not far away from the $1 million in US, right? And in Mauritius, we have 5 million Mauritian rupee, MUR. So again, that is based on the valuation of rupee versus dollar, right? So this way, I would say that India is becoming more open towards international markets. It will allow access to not only Indian investors to access global markets, but also global investors can now apply for accreditation in India by having a PAN card in India, and especially through Gift City. So I'll come to now why Gift City is becoming more important in terms of giving access to Indian markets for foreign investors, right? So this is more or less, I would say, the criteria for an individual investor or even an HUF for that matter in India to become accredited. For a trust, the AUM which is managed by the trust has to be at least 50 crore, right? So again, we all know what is asset under management, so there's no need to discuss further on that. Even a company and LLP. So again, the net worth as per the balance sheet of the company or the LLP has to be more than 50 crore, right? But if you have a partnership firm which is established under the old Partnership Act of 1932, in that case, each of the partners in the firm have to individually meet the criteria applicable to individual investors. So basically, each of the partners has to have a 7.5 crore net worth or above. Okay, we are seeing most of the investors are using the first criteria, that is the net worth criteria, to get the certificate of accreditation, right? So this way I've spoken about what are the global standards, how you can use this method to access international markets. Now the most important question is, why do we need the accreditation? Okay, why do I need to get a certificate when I know that I can easily access markets through Gift City as well? Okay, so the most important benefit, I would say, is that accredited investors are not required to comply with the minimum threshold requirements in AIF, PMS, and SIF. So you do not need to invest minimum 1 crore in AIF. You can invest even 20 lakh rupees or 25 lakh rupees in one AIF scheme. Similarly, in PMS, you can invest less than 50 lakh rupees as an investor. And even an SIF, which is recently being launched, in SIF, instead of 10 lakh, you can even do a 2 lakh rupee investment, right? So again, the benefit over here is that you can diversify a portfolio. Instead of investing your 1 crore in one scheme of AIF, now you can choose 4 or 5 schemes of different AIF managers, which helps you to not only diversify a risk but also get a like a larger return in future, right, as per the market norms. So with this, we are seeing a lot of first time managers are attracting investments from accredited investors, because it's easy for the first time managers to get lower investment amounts in the AIF. At the same time, even a accredited investor would like to test the waters with lower ticket sizes instead of investing 1 crore in all kind of AI funds or even PMS products, right? So this is the most important benefit. The second one, as I was mentioning earlier, is that you can ask your portfolio manager to customize the investment offering as per your own risk return profile, right? So it's anyways happening in PMS through the advisory PMS route. But now to get the same benefit, you do not need to have 50 lakh rupees of investment. You can even have a lower investment in the same PMS structure, right? Now, the third one is also a recent development. Now, we are all aware of what are angel funds. Angel funds make investments in early stage startups which are looking for market access, or are looking to launch the product in the market, or are looking to grow the revenue, right? Angel investors earlier used to have a very lenient criteria of 2 crore net tangible assets to be eligible to invest in angel funds. But now SEBI has said that only accredited investors can be allowed to invest in new angel fund schemes, right? So earlier, investors who just used to have a 2 lakh net tangible asset, which if you ask me, it's not a difficult thing. Now they'll have to comply with the 7.5 crore net worth criteria. Okay. Now, why this is happening? Because we all know that there used to be syndicates formed by small angel investors, and they used to collectively invest 25 lakh rupees in one angel fund or in a company directly, right? But also that adds to the risk as well. So hence, SEBI is trying to be more conservative in telling angel funds that existing angel fund investors, all of them, all the registered angel funds are required to ensure that the existing investors are becoming accredited investors before 8th of September 2026. So SEBI has given only a 1 year timeline. Within the 1 year, you have to ensure that your investors are all accredited, right? So that's the first regulatory development happening in this front. The second development is the launch of co-investment vehicles. So I'm sure you're aware that a category 2 AIF used to do co-investments in unlisted companies using the co-PMS route. But now to make it easier, the CAT 2 AIF manager can just simply launch a co-investment vehicle and attract investments from the current investors as well, and outside the fund, like external investors. But now SEBI has said that as a CAT 2 AIF, if you're launching a co-investment vehicle, then irrespective of investors being in your fund or not, they have to compulsorily be accredited investors. Okay. So for all those investors who are exploring early stage investments or pre-IPO investments, which has become very hot nowadays. So pre-IPO investments have now become restricted to only the accredited investors if you want to go through the co-investment vehicle route, right? Otherwise, directly, if you want to go and be on the cap table of the company, then there's no restriction. Okay, but generally that is only for big family offices, and all the big family offices, your state government, sovereign wealth funds are deemed as accredited. You don't need to apply for a certificate of accreditation as a government developmental agency or government funds, etc. Right. So the third part, as I was mentioning, are the regulatory developments. Now, the fourth point is also some flexibility given to these investors, that the moment they feel that they are not eligible to be accredited, you can withdraw your certificate by giving a consent. And in that case, your AIF manager in which you invested will redeem your units and pay back the money to you. Okay. However, if you are still not withdrawing, okay, as an investor, let's say if you have now, if you were having a net worth of 7.5 crore and now it has gone down drastically, then if you don't inform the manager will always have the onus to ask you whether you are still eligible to become accredited or not. Okay. If you are not eligible, then they'll straight away redeem your units and give the money back to you. Okay. So hence, the certificate validity over here is very important. Today, if you are applying for accreditation, you can apply either for a 2 year certificate or a 3 year certificate. You cannot apply for more than 3 years of certificate of accreditation, because financial stability is always a question for even the biggest of the investors in the market, right? So this is the fourth point on you informing the manager or the manager informing you whether you're eligible or not continuously. And lastly, there are a lot of relaxations in terms of investment agreements being signed by accredited investors, okay, you can have differential rights in an AIF as investor. Okay, I'll just come to that in a moment, where we'll talk about the comparison of schemes. Okay, so this slide basically tells you on why is it important right now to get your certificate of accreditation. Okay, now this is a comparison of your current AIF schemes, the regulations applicable to them, and then there's a concept of large value funds, which every investor should have a 25 crore investment in the fund. And the third and most important, which applies to us in this webinar, is many AIF managers are now launching an AI only scheme. An AI only scheme is basically schemes where only accredited investors can invest in the fund, right? So in that case, let's look at the comparison and the benefits to an AI only scheme. As we all know that the minimum investment is 1 crore in an AI fund, that is not applicable to the AI only schemes being launched by fund managers. Okay, so this opens up the market to even your small ticket size investors. Okay, now obviously the big AIFs will not want to approach small investors, but specifically if a first time manager is launching the AIF, then for that manager it'll be easier to get small ticket size investments. Okay, and ultimately that will lead to even the big funds getting lower ticket size of investments, because you'll not be able to access funds otherwise, right? So that's the first most important criteria. Okay, for large value funds, currently 70 crore is the minimum investment size for one investor, but now SEBI's board has said that it will reduce that to 25 crore. So large value funds are typically available for your multi-family offices, sovereign wealth funds, insurance companies, domestic institutional investors like your DIIs and FIIs. Okay, because they have 70 crore to invest in one fund. Okay, but all individuals and HNIs may not be having that kind of funds. So the third AI only scheme is ultimately giving you the benefit of a large value fund by becoming an accredited investor, and that's what this slide is trying to show you. Okay, uh, so now coming to the next point, differential rights are not allowed to be offered to investors in an AIF fund. Okay, recently SEBI had said that you can just charge different management fee structures to different class of investors, but you cannot differentiate between their rights. For example, you cannot ask a class D investor to absorb losses first before any losses are given to the class A investors. So those things have now been stopped. You have to ensure that you have pari passu rights to all your investors. Okay, and that can only be happening if you are not affecting the interest of other investors. SEBI has clearly mentioned that. In fact, there's a clarification paper which has just come out on how to ensure you are within the circular's regulation. Okay, so because of this restriction, there are certain things which an AI fund cannot do. But now an AI only scheme will not need to abide by this circular, and differential rights can be offered to each and every investor based on approval coming from the other investors. Okay, so this is also a very good flexible way to raise money and offer different rights to your investor class. Okay, again, the same thing was not applicable for large value funds, so that's why I was saying that you are getting the benefit of a large value fund by launching an AI only scheme, right? Extension of fund tenure was only for 2 years in an AIF with a two-third approval of investors. Now that has become 5 years for a large value fund as well as an AI only scheme. So an AIF, especially a Cat 1, Cat 2 AIF, which is dealing in unlisted and illiquid securities, for them sometimes 2 years is not easy. Like, you would wait for the company's growth to happen and then exit at a good valuation, right? We are seeing that happening with too many SME IPOs also right now through SME funds and Cat 2 AIFs. So that 2 years has now become 5 years. So that is a very good benefit for not only the manager, but also the investors. Because ultimately the manager's profits will, with the AIF scheme's profit, will anyways passed on to the investors only, right? There is no limit on the maximum number of investors. So earlier the limit was 1,000 investors per scheme. But if an AI only scheme is being launched by a fund, then naturally the limit will not apply because you're not taking 1 crore rupees anymore as minimum investment. So you can have n number of investors with low ticket size of investments. Okay. And that also opens up a lot of opportunities for distributors as well, because we are seeing many distributors come to us and say that, 1 crore is a little bit higher ticket size for my investors. That is where they lose the opportunity to invest in AIF funds. But now that is not the case anymore. If you convince your investors to get the certificate of accreditation, which is having huge benefits, then you can accept less than 1 crore and invest in an AIF. That's the most important part, right? From the manager's point of view also, there used to be this 19C certification of NISM, which had a lot of noise in the market. It was difficult to pass. Okay. So all AIF managers had to clear this exam, or any one team member had to clear. But now that requirement is not there for managers of AI only schemes, as well as large value fund managers. Okay. And the last benefit, which is important over here, I would say that it is mandatory for all AIF funds to appoint a trustee. Okay. So although we work with trustees, but I'm just telling you that you do not need to appoint a trustee if you are having a large value fund, or if you're having an AI only scheme, because in an AI only scheme, the manager can take on the responsibility as a trustee as well. Okay, so this eases up some compliances, and the manager will have more responsibility to invest in the best interest of the investors. Okay, so in a way, it is good for the investors as well, I would say. Okay. So now, if I take it forward from here, then we are seeing that investors come to us saying that how fast will the process happen, who all will give the certificate, and what are the eligibility norms, etc. Okay, so to fasten the process and to make it hassle free, SEBI has also proposed that your AIF managers can do their own initial due diligence on their investors. If they feel that those investors are accredited, then such investors do not need to wait for the certificate of accreditation. The manager can start the onboarding process. That means having the soft commitments, okay, starting the investor pitches and the negotiations for the fee structures. However, you can only call for the capital from such investors once they receive the final certificate of accreditation. Okay. So the question over here is, how fast can you get the certificate of accreditation? Investors can now get it in less than a week if their documents are all in place. And CDSL and NSDL are the two agencies appointed currently by SEBI. So CDSL has a subsidiary called CVL, CDSL Ventures Limited. They process your documents very quickly. I would say in like 1 to 2 days nowadays. Okay. And even NDML is there, that is your NSDL Data Management Services Limited. Okay, so NDML is also responsible. But because of too many applications coming, sometimes the process may get slow. So to ensure it does not impact investors and managers, SEBI is also trying to allow initial due diligence being done by managers. This is as per the ease of doing business initiative of the Government of India and SEBI, and this will ensure faster onboarding as a AIF investor. Okay, so this is something which distributors should also be aware, because this will ensure that your investors are not losing good opportunities to invest in AIF just because they are not accredited. Okay, so this is some key things for you to keep in mind. Okay, now what is the process? What documents would you require, and how fast can you get the network certificate? So over here, if you see, there are mainly only two steps. First step is to get a net worth certificate from a CA. Okay. So as CAs, we do that process for you. To issue the net worth certificate in our name, we will need to verify your DMAT statements to ensure that you have a 3.75 crore minimum asset in financial assets, your last 3 years ITR, if you want a 2-year certificate or a 3-year certificate. Bank statements are always preferable. I'm not saying it's compulsory, but it's preferable if you are a salaried employee. okay, and do not have balance sheet. If you submit the balance sheet to us, which you are preparing, then we will not require bank statements. However, if you're a salaried employee, then in that case, we will need to get a 6 months bank statements as well. Okay. Then we have the latest balance sheet. So we will need to see what is your liability as well. Because see, net worth is not the same as assets. You would be having thousands of crores or lakhs in investments. But if you have a home loan in your name, if you have a car loan, we will need to verify that as well. So in that case, we will require the balance sheet which you prepare. In case you do not prepare a balance sheet, then we always give you a self declaration which you will sign and give to us, saying that this is the amount of liability that I have in my name, where it can be zero also. It can be the amount that you have disclosed to us as well. Okay. And lastly, we will need a ready reckoner proof of the property which you are considering in your net worth. So as I was mentioning, the second part of non-financial assets, in that case, if you have real estate as investments, then you will need to submit the proof of the ready reckoner rate as well, right? So if you see, the documents are not very lengthy and difficult to get. It is a simple 3 or 4 document set I require, based on which my team will issue the certificate of net worth to you. Okay. And then once we do that, we will just require, as step 2, we will need to apply to the agency, that is CDSL. We have partnered with CDSL over here. So to apply to CDSL, we will need to upload the certificate which we are issuing to you. We'll require a PAN and Aadhaar card copy and a letter of authority from your investor saying that you have authorized Archit Lohia and his team to do the process, and a couple of signed undertakings which SEBI has prescribed. That format we'll share with you, and you can just simply sign the document and send to us. We'll upload them on the website of CDSL, right? So it's a simple 2-step process. I've explained you the advantages of that as well. And we are seeing a lot of interest coming all across India, especially those investors who were earlier investing in angel funds, and those investors who were wanting to explore AIFs but were not able to explore because of the 1 crore limit. Now, none of these things apply. In fact, there are more benefits of getting accredited. So this is a simple 2-step process to get your certificate of accreditation, right? Now, certain points to ponder on. So, we've been getting a lot of queries in the market on certain issues. So I just thought I'll raise some of them right now in the webinar. And you can ask me your questions on any of them or anything outside of this PPT as well. Okay. So first and foremost, most important issue I'm facing is investors are saying that we cannot share confidential data with a third party. Okay. And there are some data privacy issues as well. So the regulators recently, in fact, RBI, SEBI, and IRDA, and even IFSCA of GIFT City have said that they are trying to make use of the digital public infrastructure to ensure that your documentation required is minimum. It may take some time to get that happening. Okay. But CDSL and NSDL have to ensure that they are firstly complying with all the DPDP Act requirements, right? So protection of your digital property, right? So same way, even intermediaries like us, we are also in full compliance with the DPDP Act. In fact, our website has also got empaneled with CDSL through their API. The documents that you submit on the platform will straight away be sent only to CDSL website for the purpose of accreditation. It will not be able to download. It will not be able to save in any drive. It is straight away just going to go to CDSL, right? So don't need to worry about the data privacy and cybersecurity, because we are getting monitored by CDSL as well on this case, right? We have one more issue on OCI cardholders. So there are many NRIs who are earning very well outside India, and they also want to get the certificate of accreditation. So in that case, to clarify, if you are an OCI card holder with a PAN card in India and you are filing your ITRs, then you can apply for accreditation. If you do not have a PAN card, you will not be able to apply for accreditation, because without PAN card, CDSL and NDML will not issue you the certificate of accreditation, right? This can only happen in gift city. Okay, gift city, there are certain requirements where you do not need to uh, have a PAN card. You can invest without having a PAN card. So in gift city under IFSCA, we are also working in sync with IFSCA. Your OCI card holders not having PAN can apply under certain regulations using IFSCA and get the certificate of accreditation. Okay, so this is something which we also add on to our service. Okay, so same thing applies for even foreign investors. Foreign investors, whether you're coming from US, Singapore, or anywhere, one advantage which you'll get is that you can apply for accreditation in your own jurisdiction. So if you are a US citizen, you can simply, or even a US green card holder, you can simply apply for accreditation under SEC. I've told the requirements to you that you have to have $1 million net worth. Okay. Once you get the certificate of accreditation from US, then that same certificate will also be applicable in India, and you can start getting the benefits of accreditation in Indian markets as well. Okay, so for foreign investors, we always recommend them to apply for accreditation outside India in their local country. If they cannot do that, then the best way is to come through the OCI route and apply for a PAN card in India and then file for accreditation. Okay, so the additional step of over here which is applicable is only the PAN card. Rest all things remain the same. So again, the documents are very, very minimal, right? Then, as I was mentioning, even Gift City, that is IFSCA, the regulator over there, has started to provide accreditation to investors. The norms are pretty much the same. That is $1 million worth of net worth. Okay, and if you have that net worth, then you can just simply take the net worth of certificate as a CA, which we provide, and our net worth certificate is also valid in Gift City as well. Okay, so you can take our certificate, approach a fund manager, and say that I have been accredited in India and I am now eligible to invest in your feeder fund in Gift City as well. Because we are knowing that all the feeder funds are now being raised through Gift City because of the tax benefits over there. And also, Gift City is opening up a lot of corridors. In the last 1-2 quarters, we've seen the highest amount of fundraising done, not only from overseas investors coming into India, but even Indian investors investing in overseas markets, that is your international equities, your US funds, Japanese, Indonesian markets, etc. Okay, so again, I would say that you can recommend your investors that since you're getting the certificate of accreditation, might as well do it both for Indian market as well as Gift City. And as I mentioned, our certificate will be valid in both the places. We do not charge anything extra for Gift City. Okay. The next part is our AIF PMS accepting accredited investors. As I mentioned, first-time investors will always look to accept money from these investors. Okay, and even investors will now be eligible to invest less than 1 crore in AIF PMS. Okay, there are certain big funds and big PMSs who are not accepting even less than 2 or 5 crores. Okay, but again, that's only for the big funds who have access to funds easily through FIIs and through family offices. But those investors who are not family offices can now start approaching other managers who are willing to accept less than 1 crore. So both sides exist, the big players and the small players. So there's no question to be asked that will the manager take money from me which is less than 1 crore? They'll definitely take, but those will start with the small first time managers or mid-sized managers. Okay. What are joint assets? So you and your spouse can jointly have a 7.5 crore net worth and apply for certification of accreditation. So the benefit of that again is that you can make investments in your spouse's name and in your name under the same certificate. You do not need different certificates. Okay, you can club your assets of your wife or husband and apply for accreditation as well. However, you cannot club the assets of your father, son, brother, mother. Okay, only spouse is allowed. If you want to do a joint application with your parents, then either of your parents or yourself have to individually meet the 7.5 crore criteria. You cannot club the assets of your father and the son to get 7.5 crore. Individually, either of them have to have 7.5 crore worth of assets. Okay, so that is one very big clarification which is required. And which assets should be included in net worth? I think I've covered that in detail about the real estate and others. So I'll just move forward now with limited time left. Okay, coming to the charges. So CDSL and NSDL, both of them have a standard rate card for a 2-year duration of certificate. Okay, it is 10,000 rupees, which includes your processing fees. Okay, 10,000 plus GST for individual investors, joint investors, HUFs, family trusts, etc. Okay, and for a 3-year certificate, it's 9,500. So a little bit of discount for a 3-year certificate. Okay, and for similarly for partnership firms, trusts other than family trusts, and body corporates, these are the rates being charged by NSDL and CDSL. Okay, this charge does not include the charge for a CA certificate. Okay, so primarily what we do is the second part where we charge 7,000 plus GST is we issue the certificate of net worth as a CA in the market, and we do not charge anything extra to upload your documents or process your application. Okay, you just need to pay for the CA net worth certificate. Rest all end-to-end process is taken care of. We will do the uploading of the documents. We'll ensure that you sign the right undertakings, and you can. The most important part over here is the filing will also be done in Gift City with your approval. If you want a Gift City certificate, then we'll give that to you as well without any additional charge. Okay, so this is how we ensure that we work with most of the investors to work for their benefit, and obviously with no intent of you know data privacy issues, etc. Yeah, and why us? So basically, we are lucky to be one of the first in India to have trained a lot of AIF managers, distributors, custodian teams, trustees teams, even RTAs teams and all. Okay, and me myself, we are active co-investors in the market. We invest through a lot of AIFs in India. We also manage money for a couple of foreign clients, directly investing in listed, unlisted, and AIFs in India. Okay, so being in the market, I know what's going on within the investor community, distribution community, and I see the need right now to get your investors accredited. Okay, so being a team of CAs, we are very well happy to do that for you. And the most important part is we are empaneled with the KRAs in India as well as in Gift City as well. So as I was mentioning earlier, with our certificate, you will be able to apply for accreditation not only in India but also in Gift City, right? So yeah, this is something about me and why we can help you. So I think I'll end my PPT here. If there are any questions, I'll be happy to take it forward. So Prateek.
Yes, Archit. Can you hear me, Archit?
Yes.
Yeah, thank you so much for this informative and crisp session. And we do have some questions. So I'll be taking in. Friends, if you have any questions, you can please put it on chat. I will take it up one by one. So I'll take the first question, and the question is, what is Ignite? So, as I explained in the beginning, Ignite is basically an initiative for mutual fund distributors and the entire community. And the first and the most important aspect of this initiative is to have a detailed feedback. And we are open to listen. If you have any issues, if you have any service issues or operational issues, if you have any suggestions to give us in terms of digital curation of assets or any you expand your business, service your investors more efficiently, we are open to that idea. So that is one of the prime objectives of initiative is to engage with you. And apart from that, the idea is more to do with having a dedicated relationship manager down the line. And of course, access to various digital tools, what we have curated for you. So the video what was playing in the beginning, you saw there are many platforms and tools which are available, which we will be uh, giving it to you, in fact, and probably that will help you expand your business and reach out to your investors more effectively. So that is about Ignite. And another aspect for Ignite is also a continuous learning. So today's webinar was the first of the series, and soon we will be having a webinar on NISM 13, which is an exam which is required to be cleared if you want to sell derivative linked investment products. So for example, SIFs, a new category of investment created by SEBI. And of course, there are three SIFs which are live in the country right now. So Quant, Edelweiss, and ITI, which is currently on. So if you wish to get associated or sell SIF as an investment option to the investors, apart from accredited investors, you will have to clear an ISM 13 exam. We will be taking the entire session and we will ensure that we help you prepare for that exam. And this exam is just having this webinar is just I think 2 to 3 weeks away. And we also wish to start a podcast series where we'll be calling industry experts to share their thoughts with you. So that probably, so you will soon be getting invite. The first podcast is scheduled on 18th of this month, and we will share the invites and details soon. Over to you. So Archit, I will take the next question. Uh, we have one question. Just hold on. Can a CA give the certificate required? Is there any format in which the certificate is required?
Yeah, so there's a separate format given by SEBI and CDSL and SDL. So the normal certificate of net worth do not apply in this case. And also the methodology to compute the net worth is very, very different as compared to other certificates as well. So that is why we are focusing only on these certificates.
Okay, perfect. I hope that answers. We have another question, and this is a very interesting question. As an MFD, how do I pitch AI status? AI means accredited investor here to the 1.8 crore HNI who is 20 lakh short on net worth without sounding very salesy or pushing debt. So how do I convince that investor to go ahead with that aspect?
So I feel that's a very good question. Now I feel that you don't need to convince them. You just need to tell the benefits to them. It is for their benefit. Okay. Now, if any investor is falling short of the net worth criteria individually, I've given options like how you can get the net worth using your joint assets of your spouse as well. And we are seeing a lot of applications coming in joint name. Okay. So you can convince the investor saying that you and your spouse can jointly get the benefits under the same application, and both of you can then later on individually invest in AIFs and PMS, that too then lower ticket size, not 1 crore and not 50 lakhs, right? So that is one way I feel you can see them convincing. Second, in I would say, which is very fancy if you don't sound salesy and a little bit updated, is that accreditation opens a lot of doors in Gift City as well as international markets, okay, which currently you would not be able to get. So just because you're 20 lakh short, you should try to find a way how you can get accredited and get the benefits of international exposures as well.
Okay, thanks, Archit. We have another question, and I think this is a very interesting question coming from individual mutual fund distributor that big banks are offering free AI accreditation plus priority PMS access. How do we compete on service and not just reach?
Okay, that's also a very good question. So that is where, we come in the picture where, if you get the accreditation done quickly through our platform, we can also, since we work with a lot of AIF managers and a lot of distributors as well, we are having our own community which will help you to not only pitch more products but also get more clients and more earnings in that. Yeah, but that the fact still remains that if you want to compete with the big banks or big AMCs which are now coming in the digital market. Okay, to compete with them, you have to be one community and try to take the benefits to the investors, convince them on why is it important, and then allocate the money for their own benefit. So, I would say that is the best way. Prateek, you're on mute.
Sorry. So we have another one. SEBI mandates distributors to verify AI status annually. How do I automate this without annoying clients or risking fines?
I think this from manager's point of view, the question must have been asked. So yeah, so there are now, if you ask me, there are certain AI tools as well, which will help you to track the net worth status of your clients and investors. The most important way to do it is you can just ask for the NSDL cash statement or any CDSS statement as well, the combined holdings. Only that one document you can ask for them annually and ensure that they are meeting the criteria of net worth.
Perfect. There's one last question that most HNIs, when we approach, they ask, what's in it for me beyond PMS access? So what is one killer benefit I should lead within 30 seconds?
Access to global markets in a much more hassle-free manner. As I mentioned, Gift City is, no one, HNIs are now just starting to see the benefits of Gift City. And that is one thing which, we need to tell them about. And the benefits is not only access to PMS and AIF, it's also diversifying across PMS and AIF. It, like, instead of putting 50 lakhs in one PMS, if you can put 10 lakhs in 5 PMSs, then it will help you diversify the portfolio, right? So these two
Perfect.
points are very strong, and you can do it in less than 15 seconds also, not 30 seconds also.
Perfect. I think you have answered it. So friends, if you have any more questions, please post. And also note that we are available in case you want to watch this video again. We have our YouTube channel. We'll be posting this video shortly over there. And we have a dedicated email ID for Ignite initiative. You can please note it's called ignite@kfintech.com. I'll repeat, it's ignite@kfintech.com. So in case you do have anything which you wish to reach us out, so we are always available and your feedback will be appreciated. So actually, I think we don't have any more questions, and thanks for your time. I think you have been, you've added value to a lot of people out there seeking answers to AI and its benefit and what exactly it has in stores for them. So thank you so much, Archit. And friends, if you do have any more questions, please reach us out at ignite@kfintech.com. And thank you everyone for spending a valuable time with us, and looking forward to see you again soon. Thank you. Bye-bye.
Thanks a lot, everyone. Thanks, Prateek, for inviting us and having this wonderful session. And looking forward to more work with Ignite as well.
Sure,
and yeah,
Archit.
all the audience can reach out to us also on our email ID,
Yes.
which was shared in the PPT.
You can share your, I guess you have shared your mobile numbers also. Done.
Yeah, the mobile number and email ID is there in the PPT. You can just always reach out to us. No worries.
Thank you, Archit,
Okay.
and thanks everyone for your time. See you.
Thank you.
Bye-bye.